Are you somebody that wants to take advantage of the stock market but doesn't want to take on a lot of risk with their investments? Do you want to be able to tap into the potential large returns of the stock market but don't want to pay high fees like if you were to pay a financial advisor or invest in a mutual fund? Then you might be what I would call an index investor, or as some would call a Dave Ramsey investor. Hey there, it's James, and I'm a licensed chemical engineer, and I really enjoy the stock market. And my journey into the stock market began with my first company's 401k, and my engineering background. It really helped me understand some of the key principles in the stock market. And my goal with this YouTube channel is to be able to help you to become a better and more responsible self-investor. And today we're talking about the index investor. So now we're over on my free investing style spreadsheet, and this spreadsheet has just as a little guidance to those that may not understand what type of investor they are. They understand that their money's losing value sitting in the bank, but they might not have a complete understanding of what they should be investing in. With this investing quiz, you answer these 15 questions right here, and out spits an answer of one of the 8 different styles of investors, and as well as a profile of what that investor kind of looks like. We've talked about the hands-off investor and the income investor, and these style of investors, they're aware of inflation and they want to try to combat inflation by having some of their extra money outside their emergency fund. They want that extra money to grow. With a hands-off investor, they're looking at high-yield savings, money markets, or CDs. With an income investor, they're looking more at income ETFs that are using some type of options contract that a management firm is actually employing those option contracts, and they're seeing a pretty sizable amount of return with very little downside. But then the next step would be an index investor. And an index investor, you're going to see a little bit more risk to these investments. And I would say ETFs such as VOO, QQQ, and DIA, which is Vanguard's S&P 500 ETF, and this is Invesco's QQQ High Growth ETF, and this is the Dow Jones Industrial ETF. And you can expect, depending on what year it is, you can have a negative year, and if you are not watching it and you pull your funds out, you can actually lose money, and that's where the risk comes, and I think is what turns people away from the stock market. But then if you have a really good year, you can have some pretty incredible returns. Now you see 31% for an S&P 500 index fund like VOO. One of my favorite websites is the historical returns of the 3 indexes. So the S&P 500, if we click on historical returns here, over the past 10 years, you can see we've only had 2 negative years. So your funds would have grown pretty significantly since 2014 if you wouldn't have changed a thing. With about $10,000 invested, you'd be anywhere from $30,000 to $60,000 if you invested in any of the 3 indexes. Just take a look at 2021. The S&P 500 index grew 28%. Let's take a look at the NASDAQ 100. You can see the NASDAQ 100, same thing as the S&P 500, 2 negative years, one in 2018 and one in 2022. However, in 2023, a 53% return. That means in just 1 year, if you had $10,000 invested in QQQ, you would have gained $5,300 or $5,300 on top of your $10,000. Think if you would have had that invested back in 2014, 17%, 8, 5, 31, then you lost 1%, 37, 47, and 26, and then you lost 32, and then you gained another 53 and 17. If you had $10,000 invested, you'd probably be sitting around $40,000 to $50,000 in QQQ. And then last but not least, one of the remaining few large indexes is the Dow Jones Index. And the Dow Jones Index holds about 100 separate holdings, and we'll go over just highlights of these 3 indexes here over on Seeking Alpha. But the Dow Jones has 30 holdings, and they're more well-established older companies than some of the newer tech companies like in the VOO and in QQQ. And you can see smaller returns, but also a smaller drawdown during the negative years. So that's the type of returns you can expect with the 3 indexes. So there is a slight risk involved in investing in ETFs, whereas investing in these type of investments, if you're a hands-off investor, or these type of investments, if you're an income investor, there is a potential for a loss. And if you're not in the stock market for a long period of time, you won't be able to recoup some of those losses and be able to obtain some of the 31% and the 50% years if you don't keep your money in the stock market. And I think that kind of makes some people shy away. They don't like to see their money go down, even if they're not going to touch it for a very long time. So for example, let's say we had an 18.5% annual yield on $10,000 in cash. That would yield us around $1,850. And if you were to reinvest that, you'd have a total of $11,850 in your reinvestment. Let's say you had a really good year and you did not have any drawback for a year or two, and your annual yield was 50%. Well, that's $5,000 on your $10,000 investment that you can reinvest the next year. However, let's say you did hit the stock market the first time you invested in the stock market, you had a down year, say it was that real drastic negative 32% of QQQ. A negative 32% give you a negative $3,200 value, which would bring your final balance down to $6,800. So to be able to get back to that original investment, you'd have to keep your money in the stock market and allow it to continue to compound over the next 2, 3, 4, even 5 years to be able to get a sizable amount of return. Over on my Self-Investors Workbook, and I do offer this workbook over on Patreon, I wanted to compare the difference between VOO and QQQ with some of the growth and contribution numbers. But before we do that, let's head over to Seeking Alpha and try to grab some of these numbers, and then also see what is under the hood of VOO and QQQ. What are these ETFs actually holding? What are the stocks that's actually in these ETFs? Well, VOO over on Seeking Alpha's page, and Seeking Alpha is my favorite stock investment website. They have everything. They have analysts' ratings. They have different grades on how large the ETF or stock is growing compared to its peers. It also has a bunch of different stock data right here in a summarized fashion, and it also has various articles associated with this ETF or stock that you're looking at. And if you don't have the paid version, which I have a 2-year premium subscription, I get unlimited articles and I get to read some of these financial gurus' articles, and I get to read as many as I'd like. But with the free version, I don't think you get to read but maybe 1 or 2, and then it locks you out. If you're interested in a premium version of Seeking Alpha, I do have a discounted version with a 7-day free trial that they're running right now. And if you'd like to try that out, the link is in the description. So just let's take a look at what is under the hood of VOO. If we click on holdings, there's 11 different sectors in the stock market, and VOO is 31% in the technology sector, and the top couple holdings are, you guessed it, Microsoft, Apple, and Nvidia. So when you hold this ETF or this index, you're holding 3 of the largest companies in America. And over on QQQ, 11 sectors where it's more heavily weighted toward the technology sector at 53%, where the top 10 holdings are Nvidia, Microsoft, and Apple as well. Let's take a look at the Dow Jones ETF. Let's see what's under the hood there. Again, 11 different sectors and 23% in financials, where only 19% is in technology. Where the top 3 holdings are United Health Group, Goldman Sachs, and Microsoft. So coming back to our investment workbook, all of these figures here, the dividend yield, expense ratio, are found over on Seeking Alpha in the summarized section right there next to the graph. But down here is our growth and contribution numbers. And as with all of my spreadsheets, any of the yellow highlighted boxes, this is where we're going to be changing the inputs, and the green is the things that are going to change as we change our inputs. And if you have any confusion on how to use this spreadsheet, I do have video instructions for each of the spreadsheets that I offer. So let's say the monthly addition for VOO and QQQ is 500, and let's change it from the 0 figure here, the 0 growth rate. Let's say VOO was able to grow, which I think this is a modest assessment for it to grow 12% per year over the next few years. And QQQ, let's say we're to grow a little faster, since it does have a little bit more weight toward the tech sector. Let's say it's 18%. You reinvested the dividends. You'd reinvest this 0.5%, this 1.28%. Let's say you started with $10,000. In 10 years, this is what you could expect with these cumulative annual growth rates. So if you're interested in purchasing this calculator, head over to Patreon, and I do offer this calculator over on Patreon. Head down into the comments and let me know which type of investor you think you are. This is a free quiz. Just go into the description and click make a copy, and this spreadsheet is yours. Answer the questions and let me know which type of investor you are. And with that, thanks for watching.